Welcome to Undercover Analyst. The Reserve Bank of India is set to introduce a central bank digital currency, that is CBDC, in the country's call money market. So now this move is a very significant move in India's digital currency journey. Now RBI is planning to go to the interbank borrowing market, specifically the call money market. Now, the central bank may introduce CBDC in the call money market. This was the news a couple of days ago. And the central bank's vision is to leverage CBDCs as digital tokens for facilitating call money settlements with the interbank borrowing market. So, we'll try to understand what really is a call money market first, and then move on to understand the CBDCs in detail. So call money market, also known as money at call at several countries, is a short-term financial loan that is payable immediately and in full when the lender demands it. So a bank lends to another bank through this call money market. If a bank is in shortage of funds for a couple of days or maybe 3 to 4 days, it would borrow that funds from another bank, and the lending bank will use the call money market to provide these funds. So these are short-term funds for the banking operations, and this is not like having a fixed payment schedule like we have in case of term loans. This is just a one shot payment is done to repay the loan. So now let's come back to understand what the RBI is actually doing with the CBDCs. So by introducing CBDC into this market, the RBI aims to streamline and modernize the process of short-term borrowing. And well, this CBDC is undergoing a pilot phase, so both the retail and wholesale segments of the economy are trying to understand with this pilot phase how exactly will the digital currency will work. So this strategy move by the central bank aligns with its goals of achieving 1 million transactions of CBDC per day by this year end. Now, as India continues to explore and integrate CBDCs into the financial landscape, this development underscores the country's commitment to embracing digital innovations in the monetary system. This CBDCs has been in the news for quite some time, and the central banks all over the world are either in development phase or in pilot phase, which means they have already started to test the CBDCs. But how big is this CBDC, and what exactly are CBDCs? How is it very different from the cryptocurrency, and what impact will it have on the financial markets, in the money market? We'll see that later in the video. The CBDC for sure is the new buzz in the digital currency segment, and this is happening worldwide. Many countries have already started the development phase. Many countries have started to run it as a pilot process. They are trying to understand the implications of the CBDCs as a digital currency and its viability in the financial markets for the better functioning of the financial system. So we'll go ahead and analyze the aspects of CBDCs, the central bank currencies, and we'll compare it with the cryptocurrency, which is the most confusing thing about CBDCs is people get confused as to how is it different from the cryptocurrency, and is it because the cryptocurrency would be banned by all the countries one day? The central banks are launching CBDCs, but it's actually not like that. But just before that, just a quick reminder, if you have not subscribed to this channel, please do subscribe if you like the content which I make. Let's go back and try to understand what are CBDCs. So a central bank digital currency is a digital currency issued by the nation's central bank. In most cases, a CBDC will stand for an entirely digital version of the country's pre-existing legal tender. So let's say for the United States is the US dollar. For Britain it is the Great Britain pound, And similarly for India, it will be INR. So it's going to replace the traditional currency totally into a digital legal tender. So that's what we are trying to achieve. A couple of modern day factors drive the desires for central bank digital currencies. One of the most prominent is the declining use of physical money. Uh, Most of us use our payment cards or contactless payments on our smart devices to purchase goods. Many vendors have now only accept card or smart payments, and they don't accept cash for better accounting. Now, this has become widespread uh, after the COVID-19 pandemic. Another factor fueling pro CBDC side is the limitations some people face when accessing financial services. So, the use of cash has been going on for centuries, and the problem with cash is it is virtually untraceable, and that's one big problem with cash. And that's the reason why a lot of drug dealers, drug peddlers, and money launderers have been using cash. And to avoid this, the CBDCs could have, a major impact on the curbing the cash from the system. And which eventually the central banks want to do is they want to just stop the cash transactions overall. And here's another big advantage of central bank digital currency is that uh, millions of people don't have access to a bank account, and this is not just only for third world countries or the countries which are not developed. This is also for the advanced countries where millions of people still don't have a bank account. And this is what is called as the central banks, what they're trying to achieve here is called the financial inclusion. So how do you think they deal with these unbanked population? How do they deal with? They deal in cash. So the CBDCs just want to help individuals to. The introduction of CBDCs just wants to minimize the use of cash in the system. So how many countries have CBDCs? Well, central banks in many countries have pilot programs and research projects to determine the viability. But so far, this is the list of companies who have uh, where the CBDCs are already implemented and they are using it now. Only Nigeria could be considered as a big country with a big population, but otherwise these are small islands. But what's interesting is even though these small little islands are in here, but there could be big countries coming in for the play of CBDCs. So let's try to understand how many countries are building CBDCs. So you will be surprised to know how many countries are involved in their project to implement CBDCs. 18 countries are now having a pilot program, including 7 from the G20 nations, and 32 countries have a program in development. And according to the Federal Reserve of the US, the US is one of those countries that is exploring whether the CBDC could improve the domestic payment systems, and that will be a big breakthrough. The big news is that all these big giants are now in their pilot phase of CBDC implementations and have set targets for transactions by this year end. Now, here are the big names which are already doing a lot as far as CBDCs is concerned. The biggest one being United States, Brazil, India, and Russia. So these are not small countries, these are big giants. The big news is that all these big giants are now in the pilot phase of CBDC implementations and have set targets for transaction till the year end 2023. So now this is the big question which is confusing everyone, and that's, is CBDC a cryptocurrency? Now, this is where you have to understand the difference between centralized and decentralized network technology. Now, CBDCs are controlled by central banks, so it becomes a centralized network. Though the idea of central bank digital currency stems from cryptocurrencies and blockchain technology, CBDCs aren't cryptocurrencies. A central bank controls a CBDC, whereas the cryptocurrencies are almost always decentralized, meaning that they can't be regulated by a single authority such as a bank. The biggest problem cryptocurrency users have with central banks issued digital currency is that they bear very little resemblance to cryptocurrencies such as Bitcoin. Now, this is because CBDCs are inherently centralized, which means that a single authority is in charge of the token issuance, transactions, and the network's long term security. On the other hand, the most cryptocurrencies have been designed specifically to function in the absence of governments and central banks. So that's the major difference. So cryptocurrencies at the first place were created so that it is out of the influence of the central banks and governments. And the influence of a monetary policy and quantitative easing and all these stuff doesn't apply to the cryptocurrency, whereas at the same time it will all apply to the CBDCs because it has been launched by the central bank. So most central bank designed digital currencies will not be on the blockchain based, but it's likely not leverage many of the cryptographic principles, but still it would be the bedrock of modern day digital currency. Now, will CBDCs replace cryptocurrency? Now, that's a big question, right? So, cryptocurrencies have enjoyed tremendous success and growth over the past few years. So much so that the entire nations are now looking to integrate the underlying technology within their financial system, and that's the reason why they come up with the CBDCs. So I would say that they have they are using the concept of cryptocurrencies, but it's not exactly like cryptocurrency. So central banks realize that they can extract immense value from digital currencies, and because there's been a worldwide push for cashless transactions. While CBDCs are often seen as a revolutionary step for fiat currencies, it is worth noting that it has also created significant controversies of late. I mean, the cryptocurrency enthusiasts don't really like the CBDCs and they have their loudest disapprovals in this regard. Uh, but there are clear advantages of seen in the CBDCs, and that will be like the easier cross-border transaction and a society which can reach to a cashless transaction. I'm not sure whether that will be good for the society with zero cash transaction, but it can achieve that for sure. And there is always clear advantage to be seen in the CBDCs when it comes to cross-border payments, like I said earlier. And also the biggest USP has been the financial inclusion as per the central bank. It is definitely not going to replace cryptocurrency, as cryptocurrencies are peer-to-peer currencies and are not centralized. So that's what the RBI is trying to do. And it says that the CBDC will make cross-border payments cheaper, faster, and secure. So what's happening is right now there is a big transaction cost involved if there is a cross-border payment, and if the cross-border payment has as an intermediary in between, that will make the cost even higher. So what RBI is trying to achieve, the Indian Central Bank, is they want the CBDCs to make the cross-border payments cheaper, and that's why they have implemented the pilot process in the call money market. So CBDCs aren't decentralized, so what's the point? The two major benefits which the CBDCs provide is, one is cash, which has been the de facto medium of exchange for centuries and is notoriously untraceable. This lack of traceability has popularized the use of cash among criminal enterprises, generally for avoiding detection, money laundering, tax avoidance, or maybe the combination of all. So, even though Bitcoin and other currencies have been argued of facilitating criminal activity, the fact is that they are highly traceable somehow. Any transaction involving common cryptocurrencies include highly specific data, including the recipient's wallet address, timestamp, and destination. So, because of all these stuff, you can easily trace a transaction, unlike in cash, where you cannot find you cannot actually trace the cash transaction. The exception of this rule can be said to be the privacy-centric cryptocurrencies like Monero and Zcash, but the adoption of those tokens still remains very low and doesn't count into the potential for misuse. In fact, cryptocurrencies enable traceability to such a high degree that uh, now the entire companies are now analyzing suspicious criminal or fraudulent crypto transaction. There's something called chain analysis, where several government agencies, financial institutions have come together to regulate the cryptocurrency exchanges. Now, eradicating cash in favor of a more traceable solution means the law enforcement can reference an alleged criminal's transaction history. And with the help of forensics and data science, we can try to understand and predict the likelihood of an illicit activity. And earlier, this was done with cash, which was not traceable. And to avoid this, CBDCs could be, uh, very helpful in doing this. Let's see the big advantage of CBDCs. So, while it is easy to dismiss CBDC saying that it's not a decentralized network, they also enable some legitimate applications actually. Financial inclusion is perhaps the most important advantage of a CBDC centric economy. Uh, like developing nations like India and Kenya have seen enormous upticks in financial inclusion, which had a big problem for decades when it comes to financial inclusion. Uh, so, what does financial inclusion actually mean? Is trying to get the unbanked population with the facility of using a bank, and this is a big problem for low developed countries as well as the developing countries. Another advantage of CBDCs would be that it can vastly improve the lives of those who rely on the cross-border transactions. So, according to the World Bank, global remittance reached almost 700 billion in 2018, and there is a huge transaction price which they have to pay. So, typically, international wire transfer involves several intermediaries, high fees, and potentially several days worth of delays, unlike the domestic transfers which can be settled instantaneously. The international payments industry still relies on a slow network, the SWIFT network. And while the SWIFT network enables overseas banks to transfer funds, it is only possible if you have a direct relationship. And if there is a third party in between, that will make an extra step for the money to get transferred, which involves a higher cost. Regulatory due diligence steps can delay the final transaction settlement, and this also means that the cross border transactions are extremely expensive and due to the involvement of these third parties. So, cryptocurrencies have already proven that international transactions can be completed within minutes, if not seconds. And the CBDCs provided by these central banks would also serve the same purpose. Here's another big question is, so who will survive, the CBDC or the crypto? Well, we have seen the major difference between the two currencies. As of the central bank issued digital currency, the future remains bright for their introduction and even subsequent adoption, because that will be legal and that will be regulated by the central bank, by the government. So it changes nothing, as a digital currency will remain fiat. That's the big problem. So even though it's digital, it is not backed up by anything. And so the rupee which you had in a hand, or the dollar which you have in your hand, the cash is actually not backed up by anything, and that will remain the same in case of CBDCs. So it is also a fiat currency, not to get confused with. It changes nothing, as the digital currency will remain flat because it is not backed up by anything and works on trust. So centralized and traditional cryptocurrencies, meanwhile, aren't going anytime, anywhere soon. So it's likely that both will coexist, with individuals preferring one over the other. But if the central banks make this a legal tender, the CBDCs would be enforceable to the general population, and they'll have to use that because the cash usage might be curbed by the central banks all over the world. And the other problem with the cryptocurrencies is the absence of central authority uh, is the strongest point against crypto adoption. So central bank digital currencies and cryptocurrencies can exist, but overall the CBDCs are going to beat the cryptos as far as usage is concerned, because most of the population would be using the CBDCs compared to the cryptos. So that's why the crypto future still looks bleak in terms of digital currencies. If you like this video, please share, subscribe,